First up, the disclaimer. Nothing in this video is financial advice. Please pause the video now and read the disclaimer in full. A while back, I went to a crypto event in London hosted by SVK Crypto, who put on some of the best free meetups around. Plus, they're also just a great group of guys. During this, there was a panel discussion with 5 people, including hedge fund managers, VC investors, and CEOs of some of the best projects around. There was one person on the panel who really stood out to me, and I think many other people as well, because he shared so much invaluable information, but also addressed the questions so directly, which is very refreshing to see. So at the end of the event, I approached him, this is Piers Ridyard, the CEO of Radix, and basically said, do you want to carry out an interview with me so you can share some of this information with our community? I told him that I didn't want to talk about his project specifically, I just wanted to keep it very general. So talking about the Bitcoin ETF, security tokens, institutional money, cryptocurrency adoption, and other fascinating topics too. Despite the fact we weren't going to be talking about his project, he was still generous enough to say yes. So a few weeks later, I traveled back into London and recorded that interview. I can honestly say this is one of the most enjoyable and informative interviews I've carried out. I personally was learning so much during the interview, so I'm confident in saying that you guys will too, and therefore you could really enjoy this. To make this a bit more engaging, because I know some of you don't want to sit through entire interviews, what I've done is I've created time jumps which will be in the description and hopefully a pinned post if I remember as well. So basically you can look at that and you can see all of the questions I'm going to ask during this interview with a little time code next to it, and you can just click on that and it will take you straight to that question. So while I would love for you to watch the whole thing, that would mean a higher average view time and obviously benefit me. At the end of the day, it's all about you. So if you want to skip ahead at any point, please feel free to do so. Just open up the description now and you'll see all of the questions in there. The final thing to note before we begin with the interview is that the video was around about an hour long, so I've decided to cut it down into 2 chunks. This is part 1. Part 2 will be released very shortly. In fact, depending on when you're watching this, part 2 may already be out. If it is, once again, the link will be in the description. Now that's enough of me, let's begin with the interview. Okay, so I'm here today with Piers, the CEO of Radix. Thanks so much for joining me.
Thank you very much, Tom. Love to be here.
Awesome, so we'll talk about the market, etc. throughout, but do you want to first start by just introducing who you are and talk a little bit about your background?
Sure. So my name is Piers Ridyard. I am the CEO of Radix, which is a platform for building decentralized applications, tokens, and coins. And my background sort of started very much in the maths physics area of aerospace engineering, which is what I studied as my undergraduate. And then I changed to Chinese in business because I started my first company in university at the same time, and then went through this weird meandering sort of path of different industries. So I did my CFA, my level 1, and went and worked for JP Morgan in debt capital markets, and then I went and did my GDL and my LPC with a training contract for law with Linklaters. And then I ended up accidentally starting a consumer electronics company with at the time one of the UK's highest funded tech Kickstarter projects ever, and had to fly to China and set up a consumer electronics company manufacturing and delivering storage devices around the world. And then from there, like, one of my friends started asking me about mining and mining rigs and how we might build them, given that I'd been manufacturing consumer electronics for the last 3 years. And so that started my path into crypto, and that sort of fascinating overlap between mathematics and electronics in building hashing algorithms and design and building and selecting the right hardware to be able to be mining. We ended up mining on the Genesis block of Ethereum, and from there I was sort of hooked in the crypto world, and got really early into the Ethereum community, got involved in the meetups in London when it was still like the first Ethereum meetup in London was in a crappy pub. Above the pub in this tiny little room with like Stefan Toole and I think George was there. George was there as well, and like a few of the early Ethereum guys, as well as like maybe 10 or 15 like hardcore people, and we're sat there sort of talking about mining, and everyone's like looking down on us, being like, "Not the miners. They're not pure in their desire for the sort of crypto anarchist future." And then sort of just from there, it was this wonderful journey into what is possible in this incredible industry.
It's funny how it's changed. That's how a lot of people describe the early days.
Yeah.
Certainly projects that were launching, they would go around and try and raise money, and people would hear the word blockchain and throw them out the room.
Yeah.
And then there kind of came a transition moment where you mentioned the word blockchain, and now everyone wants to throw money at you.
Yeah.
It's a crazy shift that's occurred. So we'll jump into the first question. Bitcoin as gold.
Yes.
Bitcoin gold 2.0, as some people call it.
Yes.
That is one area which could be potentially disruptive.
Yeah.
Which other kind of sectors of the economy do you think the blockchain could be disruptive? And let's begin with Bitcoin. Do you think that is one of the potential disruptors?
It's interesting. Like, I have this analogy, which is a very silly analogy, but it's like, is Bitcoin a football or is it a piece of art?
Okay.
So a piece of art I have on my wall, and it has a value, and I value it because there's only one of them.
Absolutely.
Right? And I like it. And then I get another piece of art, and it doesn't change the value of that piece of art, right? That's still got value, and I still want to hold it because there's still uniqueness to it. But if I got a football, and I get another football, does the value of the football, my first football, decrease? Because what I'm looking at here is the value of the utility of two footballs versus one football.
Yeah.
And so I feel like the debate about Bitcoin is all whether or not Bitcoin is a piece of art or if it's a football. Do you use Bitcoin because it has utility, or do you use Bitcoin because it has a perception of value? So if we're saying, oh, it's gold 2.0, so this perception of rarity, this perception of being able to hold value over long periods of time, that I am the sovereign owner of this thing, whether or not that's enough when the utility of Bitcoin is essentially being eroded by everything else. Like every other platform that's coming along is better than Bitcoin at everything else but a store of value. Yes. And so for me, the question of whether or not Bitcoin will be gold 2.0 is whether or not it's a football or a piece of art.
That is a lovely way to simplify it. I take your points, to be honest with you. I'm not entirely convinced. I always kind of get negative comments, but I'm not convinced Bitcoin will become a decentralized store of value for the world. Right. If you look at a country like Venezuela, let's say, for them, Bitcoin is a fantastic store of value because their currency is so bad that losing 70-80% over the course of 10 months is pretty good in that country. Yes. So for them, there's an obvious incentive to buy Bitcoin. And that's kind of the argument that those types of countries, you have the need for a decentralized store of value.
But for them, it's a football. For them, it's not buying Bitcoin because they want to hold Bitcoin. Yeah. They're buying Bitcoin because it has a utility value to them in that they can protect themselves and they can buy goods. Yeah. Like I've heard stories of people building mining rigs in Venezuela to get Bitcoin to then be able to buy groceries in another country and bring them over. But the thing is that as soon as a better football comes along, they'll move away from Bitcoin. As soon as there is a better alternative to Bitcoin where they can still do that value transfer, do the mining, get the token, be able to buy the thing that they actually want, which is food, and bring it over, then Bitcoin no longer becomes a relevant part of the conversation. They're not holding it because it's Bitcoin. Yes. They're holding it because it has a utility value.
Yeah, I completely agree. I actually think decentralized stablecoins could potentially provide an alternative to that. If I was in...
It's funny you say that.
I was in... Why is that?
Because we're building a decentralized stablecoin.
Are you?
Yeah, it's one of the parts.
One of the aspects of it.
Yes.
Well, there you go. We've accidentally promoted Linux.
I'm sorry.
No, it's fun. Well, I mean, the reasoning is, at the end of the day, if I was in Venezuela and you told me I could hold a decentralized stablecoin which will stay level to $1, or I could hold Bitcoin which could lose 80% of its value on the US dollar, and I'm in Venezuela, I don't care about Bitcoin. I just want to buy groceries, as you say. Stablecoins, I mean, they seem like the better alternative in that. There's many aspects to it.
Yes.
But Bitcoin, I would prefer to hold a stablecoin than Bitcoin.
Yeah.
The alternative argument, though, is that Bitcoin I actually believe Bitcoin isn't necessarily a store of value, but it will get a lot of its value from being almost like the base layer of the blockchain industry. So you might have things like merged mining, you might have projects which link themselves to the Bitcoin blockchain.
Right.
Being the most secure
Yes.
blockchain, it could be the foundation layer and kind of generate a lot of its value off of other projects as a result.
Yeah.
What would you say to that?
I'd say that I hope not, for the sake of the planet more than the Bitcoin per se. I love Bitcoin's purity. I love where it came from. I think the Satoshi Nakamoto's sort of ability to see further than so many other people in creating something that has had longevity of 10 years is incredible and will continue to have longevity in it. But the security argument of saying, okay, the hashing power that we're currently using is already more than the electricity consumption of Ireland. That if we're going to rely on it as the security layer of the world, that we will need to keep increasing that, such that we already have a problem in the world with global warming, with the amount of energy use that we are having as humanity anyway. That this idea that we would fundamentally rely on a layer that is going to draw in an increasing amount of hashing power to continue to provide that security layer feels like a bad trade to me. Like, yes, that maybe mining is a great way of creating security, but it's also a terrible trade for humanity. And so I can see the arguments for that as a logical, technical, very focused on this is what it's doing and this is why it works and this is why game theoretically it's perfect. But from a humanitarian and from a wider viewpoint, it feels horrible that could be what we end up doing, is just throwing massive amounts of resources to end up creating security. And there's all these arguments that people have of saying, well, we already spend these resources in other ways for creating this security, like, you know, the duplication of data storage that we have in terms of across lots of data centers and all this kind of stuff. Yeah, sure, there's an argument there, but the trajectory of hashing power feels like at the exponent level it has been so far, we're on a road to ruin if that is what it's going to do.
Okay, so what is your opinion on Bitcoin then? I think a lot of people, say if you went 10 years from now, I think a lot of people would suspect Bitcoin will be near the top. Is it for you that you look more at the protocols and you think something like Ethereum, not necessarily Ethereum in particular, but just the idea of a protocol being worth more than Bitcoin, the infrastructure projects? Or is Bitcoin going to be highly valued?
I think that actually I have a number of maybe conflicting views in my own like sort of mind. I can see some arguments for different pathways. One of them is that the majority of the world's assets are physical assets, or derived from physical assets. You know, you could say, the derivatives market is way bigger than the physical assets.
But it's all based on underlying assets.
It's all based on underlying assets. So I think that whatever platform is able to most efficiently translate and provide the ability to own, secure, and transfer physical assets and the derivation of physical assets on a in a DLT space will be the platform that has the most value, right? Like, so fundamentally, we have trillions and trillions and trillions of dollars of physical and derived physical asset values. Whatever is the medium that we end up owning those will be the platform. No, I don't think it's a crypto native necessarily that will be the driver of value long term.
Okay, that's interesting you bring that up because we're going to be talking about security tokens later on.
Yeah.
Let's move on to top question number 2, crypto or blockchain. This is centered around the idea that there are some people out there who actually fully believe in blockchain. They think it's a game-changing piece of technology, but they're not convinced cryptocurrency has value. There's kind of, some people believe the two are intrinsically linked. Some people think there's a separation. What's your opinion on this?
I mean, I would agree in that blockchain is a data architecture, and there's not just blockchain that can achieve the same ends, right? So you've got blockchain, you've got directed acyclic graphs, you've got what Radix is tempo. They're all different ways of building the same endpoint. With crypto, crypto is kind of the thing that secures it, and we've kind of made it the same concept, but they're not the same concept. And then if you separate those two concepts out and you say, okay, so crypto as what we're talking about as, let's say, the conceptual concept of being able to build crypto tokens and being able to build crypto networks and being able to do crypto economics and all that kind of stuff, the public network stuff. And then you go, okay, blockchain is a technology set that we could apply to industries, including private DLTs, including things like R3 Corda and stuff like that. Then sure, they are definitely very separate concepts. My personal view is that we are in a similar phase to when people are having arguments about intranet versus internet. They're going, oh, like, we love this idea of being able to connect computers together and be able to talk to each other, but it's not very secure, is it? So let's have it as our own private internal company communication protocol so that, you know, we can get around this security and anonymity problem that you can attack these computers by having our own protected network, right? And then the internet was a way of connecting these like little islands together, and suddenly some more technology had to be created that created this security between an intranet and an internet, and it allowed you to have ways of bringing these things together. And essentially now it's almost indistinguishable to most people between being in an intranet and an internet. I think that blockchain as enabling technology is going to create people that create consortiums. And these consortiums will look a lot like what we thought of as like protected pools of computers talking to each other and not talking to the outside. The thing is that as these consortia get bigger and bigger and you get more and more people coming in, and suddenly, oh, this consortia wants to talk to this consortia, then the public infrastructure services side of things will suddenly become much more interesting, because when a consortia includes your entire industry and then beyond that, suddenly you have a public network. At some point, it stops being just a consortium. It starts being just a public network, a public utility that needs to be able to talk to the other public networks and utilities. So I think that you'll see this sort of starting off of what is really clearly separation between the two industries that will start to become less and less clear, less and less delineated until everything's connected.
Okay, I completely agree. There's actually, I like to use an example with Netflix and Blockbuster, kind of how I see it playing out. In the way that Netflix, they started out and they understood that the internet was important to their business model.
Yes.
So they started off by delivering DVDs to people's homes.
Yes.
And they used the internet.
Yes.
The same way I think that a lot of companies are going to use the blockchain.
Yes.
They're going to see that you can get transparency and major cost advantages. Things like supply chains, they seem like the most obvious kind of first step. Companies integrate blockchain. And then Netflix realized after a while, the internet is so game changing, we can incorporate it, but that's not enough. We need to build everything around it. So Blockbuster can make their own website. Now they've done the same thing. But instead, Netflix realized puts video on the internet. Their entire business model is built around it. So I kind of see it transitioning that we have blockchain into businesses. And then after that, we have real decentralized business models coming along, which people almost don't expect because they think blockchain's had its use in companies. And then you have kind of that period where internet companies, similar to what they did, they took over and massively disrupted existing businesses. And that's where I see blockchain and crypto coming as kind of 2.0. Blockchain's the first step. As you say, as it gets further and further, blockchain and crypto molding into one, and then there's the real disruption.
Yeah, for sure. I actually remember watching the announcement of Netflix saying that they weren't going to deliver DVDs anymore, and I can remember thinking, "Oh, that's stupid! Like, how stupid is that? Like, I'm not going to be able to get my DVDs delivered because I was watching using DVDs. I had a computer, but I didn't have very fast internet connection. I was like, this is idiotic. I can't watch it anymore. And like, their selection's really small, and obviously, you know, they were absolutely right. They just had the bravery and the foresight to take that.
And that's interesting to hear you say that, because I assume you were probably back then as well quite techie. So that kind of step would almost seem obvious to you, more so than the general public.
Yeah, I was quite young when it happened.
Yeah.
And to me, it was more, I wasn't thinking about it from a strategic point of view. I was just thinking about me as a user.
Yeah.
My internet connection sucks.
Yeah.
So I can't watch video online very well. I still need physical discs.
Yes.
And they stopped delivering. I was like, oh no! I can't get physical discs so I can watch these videos.
Yeah.
So it was more like a pain point for me, but that's what's going to happen.
Yeah.
again and again is you're going to see people making decisions that to a lot of individuals they're like, that just inconveniences me, but long term it forces a consumer change or a behavior change that is necessary for the entire industry to move forward.
It's exactly that point which makes me laugh when people say Bitcoin or other cryptocurrencies won't work because they're slow and they're difficult to use. Right? Just kind of laugh and think, but imagine Netflix trying to put internet on the video on the internet. That would have been a concept that people would say, well, the internet can't handle video. It's a matter of building infrastructure, and those kind of insignificant things disappear over time. Okay, next question. What do you think about the first killer application? So we kind of, for blockchain to become mainstream, for us to have a decentralized application that we all use, we really need the first killer application. We've seen so many ICOs launch, and they all claim to have great products. Most of them haven't launched products, and even the ones that have, still, the products aren't used by many people. What do you think could be the first killer application? And are there any projects out there that you particularly like?
It's a great question. The first killer application, it depends on how you define what you mean by a killer application. Like, to whom is the value being accrued? So a killer application for DLT that we may never see could be something in supply chain logistics, which works really well for a company like Cisco or a company like Maersk. And we just don't ever see it. So you would say to the average person, hey, there's a killer application on DLT. And it's this. And people would be like, oh, I don't care. Like, you could argue that Ripple is doing really well in their private banking, in their private infrastructure play. R3 is doing pretty well in their private infrastructure play. Maersk has got their own end-to-end shipping insurance DLT application, but you just don't see it. So is that a killer application? Because it's saving the money and it's real amounts. No, I understand where you're coming from. So for a consumer one, let's go for consumer. Because I think I agree. That's almost where the first use case is going to be. It's going to be that we don't see. I think for the viewers, the most interesting thing is the first use case they really have. So public. So the first public killer application for DLT is going to have to be two things that happen at the same time. First, it has to be a platform that is scalable enough for a public application. So like CryptoKitties broke Ethereum. And so it could have had more users, it may have had more users, but the technology underpinning it fundamentally wasn't there. So there needs to be a more scalable platform just to be able to do the consumer applications in the first place. And then the second aspect of that is it's almost certainly going to be something that consumers have to care about. Now, do they care about banking? Not really. No. Do they care?
It's a hard sector to go after as well.
Yeah, like personal finance, personal loans, interesting, useful, definitely got applications for DLT. Is it a killer application from the point of the consumer? Does the consumer see it as a win? Probably not. Does it change their behavior? Probably not markedly. I firmly believe that it's going to be gaming. That your first killer application is going to be someone who works out the way or a good way of applying crypto economics, non-fungible tokens, digital collectibles, and good gameplay together.
And allows you to transfer between games as well.
Maybe. The thing is that, if you think about some of the big game producers, who have multiple AAA titles, who also have in-game assets, Call of Duty or League of Legends, World of Warcraft, all of these kind of things, have these concepts of digitally unique objects that you own and that you can only own if you win matches or if you earn it, or loot boxes or whatever. So these AAA titles that have multiple games, strategic or competition games, simultaneously happening on their own servers, why have they not made compatible items between them? Is it because there isn't DLT there? Is it because there's not blockchain there? Probably not, because they own the servers for that. They could, if they wanted to, make cross-compatibility. I think that's an inherent indicator, not that it's the technology, the blockchain or DLT is needed for that, but there's actually a load more complexity behind that we don't see. So I'm not sure that cross-compatible in-game items is necessarily the big selling point here.
Okay.
I think it's more that when you make digital scarcity or physical scarcity of something, and you give good reasons, like reasons that people can buy into, rationalize, and fall in love with, then you create a community around that. And like some great examples of that are Pokemon, like the rarity of Mewtwo, or like Magic cards, and the rarity of I can't remember if it's Black Orchid or something like that. I'm going to apologise to anyone who loves Magic that I'm struggling on this. But Magic the Gathering, the community is built not just around the game, but around the cards, the rarity of the cards, and the way the cards interact with each other, and when things are permitted or not permitted, and that dynamic. That all has such possibility when you add in the ability to make provably digitally unique objects. And the wonderful thing about a game is I can download it on my phone, and I have the wallet already in the game. Like I don't have what I often call the double onboarding problem, right? I have this thing that I want to use, but I also have to download this other piece of software to be able to use this thing, and then there's this weird clunky way of bringing them together, and
which entirely affects the user experience.
That. And so it massively affects the user experience. But for a game, I can have a game on my phone, and in that game already, without me knowing as a consumer, is my ability to hold crypto. So for me, the killer application will be some viral game that will look something like Fortnite, or will look something like Pokemon, that will capture the imagination and will have an inherently crypto element to it, that will push crypto into the mainstream consciousness, because people will be talking about it. You'll have mainstream media like talking about how idiotic it is, and you'll have like teenagers going crazy for it, and it will look like every other thing that has happened before. It will just have this extra technology aspect to it, which means that real money, like real value, can suddenly be expressed and involved, which is scary in some ways, it's fascinating in others.
I wish I could disagree with you because I want to debate, but no, I completely agree. When you look at something like FIFA coins as an example as well, people are already earning FIFA coins and spending them on packs. As you say, with the user experience, just changing that to a cryptocurrency will not affect them in the slightest, but it just provides massive advantages. And for the people issuing coins, you know full well they can sell those coins, raise a bit of money, put that towards development. It does seem like the most obvious at least the first place disruption. For me, it's not the biggest. Like, there's going to be a lot more different applications in the future. I like the idea of the sharing economy. I think that's going to be a big one. Things like Uber, Airbnb, all these intermediaries just taking a huge cut because they've built a network effect over time. I think we're going to see a lot of disruption with that as well. But as you say, gaming does look like the obvious first one. Let's talk about the security tokens. So security tokens is something which a lot of people are talking about.
It's a hot thing right now.
Yes, I've done videos on it. I'm personally very excited by it. I think there's a real advantage to bringing liquidity to incredibly illiquid markets. But at the same time, as with everything in this industry, things that in the future often get a lot overhyped. It's kind of how this industry often runs. What's your take on security tokens, security token offerings, and how do you see it all playing out?
I think security token offerings fundamentally represent the professionalization of the industry. Right. It's going from it started as we're outside regulation, so we don't need to worry about regulation. And then the regulator coming in and going, no, you kind of are in regulation. And so they're going, well, we're not in regulation if we pass the Heavey test. So let's say that there's a utility underlying this. So then we're not in regulation. And then the regulator going, no, you're still in regulation. And then people going, okay, maybe if we're still in regulation, then we need to start thinking about how we can operate within this framework. And fundamentally, I don't disagree with the concept of regulation. Like most regulation, you look at where it came from. It came from a period or a place or a time or a thing that happened that meant that everyday consumers were defrauded or misled or misrepresented or essentially cheated. And so a lot of this stuff here is trying to serve justice to the everyday person, to try and prevent people taking advantage of informational asymmetry and all these other things that you often see happening in the market. So I think that this is a maturity and an acceptance by the industry of going, well, we have to accept that regulation does apply. And so there's all these technology advantages that this actually gives to regulated industries, because DLT blockchain technology has got some really interesting features to it that make it particularly applicable to security token offerings and anything within a regulated space. You have this ability to create controls on ledger that enforce strongly what the regulator wants to happen. You can only have these kind of owners. You can only send these tokens to these kind of addresses. You can only own it if you can prove these things. And that has a way of digitally enforcing something that wasn't previously entirely digitally enforceable. You've got all of this wonderful stuff like I can audit trails and trade audit trails and the ability to see where transactions went and to whom. And so you've got these things that are really useful. So I think security token offerings are here to stay. I think security token concept is here to stay. I think that's going to be the largest part of the industry.
Yes,
is things that operate within that sphere. Because as we were saying before, like what's the most valuable protocol going to be? Where's the most value in DLT going to be held? And it's going to be representations of physical assets. And representations of physical assets or physical derivations of those assets like equity or debt and things like that, that's all going to be within the regulated space. It's going to be the crypto empowering the technology, the market that is already there, but bringing it kicking and screaming into a much more efficient world. Because right now, post-trade settlement services are a nightmare. And there are so many people who take cuts at each stage of that can be got rid of with this technology that the everyday consumer doesn't see, you and I don't see, but we pay for in how we interact with this industry, because every time we take a loan or a credit card or we do anything like buying shares, there's all of these little cuts that are coming out of it as a result of this immensely complex structure that sits behind it that can be made so much more simple by the technology. So yeah, I think it's here to stay.
And as an investor, where do you think the opportunity is? I think I might already know your answer. What I mean is there's kind of two ways of viewing it. Like security tokens could mean Apple shares on a blockchain. But for me, there's not really much opportunity there because Apple's already a massive company, and just moving their shares onto a blockchain doesn't necessarily change things for me. The price will still be the same. There's not much opportunity. But the other aspect is that most ICOs realistically have already been security tokens. We might not have been regulated like that, but that's the truth of how they are. Where do you view the opportunity with the upcoming security token trend?
I actually view it in the Apple shares on the blockchain.
Okay.
Reason being is, why do people care about fiat-backed tokens?
You mean stablecoins?
Yeah, well, I specifically mean fiat-backed tokens. So not algorithmic stablecoins, but specifically fiat-backed tokens. Why do people care about them? Why has Tether got $2.2 billion under management?
Because it's such a volatile market, and anything that can provide stability is naturally going to generate value.
Right, but so why not just hedge out into the real money?
You could argue cheaper trading fees. For example, if you wanted to cash out on Coinbase, that's 5%. If you wanted to trade to Tether, even though I don't like Tether personally, but that type of equivalent, you're looking at 0.1% fee.
Yeah, okay. And why doesn't that apply to the equity market?
What?
Why doesn't that apply to Apple shares as they stand now? Why doesn't that same logic apply to what we already have as infrastructure now. So, and it's not, and I would argue that it's not just the cheaper trading fees and stuff like that. It's also the ability to program. Like, I can put a tether into a smart contract. I can't put a piece of fiat into a smart contract. So this adds the programmability. That concept doesn't go away when you start looking at equity, when you start looking at debt. Like, this idea of being able to take a piece of equity that already exists, has value, an Apple share, and being able to make programmability about it so that suddenly I could have a smart contract for an option or a short sell. I can have a smart contract for being able to collateralize something else with it. All of that becomes immensely useful. So this powerful technology piece that you have here, combined with an asset class that has billions of dollars behind it, that's where I see.
There is actually the opportunity in that I'm really excited about is, as you say, the programmability aspect. Like, I fully imagine a future where if you've held X number of Apple shares for X number of years, you walk into their store, and because you've got your phone tracks your location, says you're in the store, now you're going to be rewarded with X number of points, or you get a 5% discount on products. Encoding that into a share is absolutely game changing.
Right.
But is there opportunity in that if you're not already in that market?
Yeah, huge opportunity in that if you're not already in that market. So one of the biggest areas that you're going to see growing next year, year after, is you're going to see a lot of talk about custodial services.
Absolutely.
Right. So a custodial service is this bridge between the traditional world and the new world, where I don't have to have Apple's permission or the London Stock Exchange's permission to take a load of Apple securities. I don't know if they're traded on the London Stock Exchange, so I apologise if that's incorrect. But take a load of Apple securities, put it with a custodial service, and then tokenise that. The same as the Tether doesn't expressly have the US government's permission to tokenise dollars, but they've taken that asset and they've done that. Now, there is obviously a load of regulatory complexity here that I'm sort of skimming over, but ultimately the people who decide that they want to bridge that gap and introduce these services into the crypto economic realm, into the blockchain realm, into the smart contract realm, into the DLT realm, there's loads of opportunities there for like repurposing existing assets and making them more programmable and more interesting and more flexible and more tradable. Yeah, like there's huge opportunity.
Okay, I thought that was what you might say, because there's a few different elements to it. You could argue platforms like T0, for example, not them specifically, but the concept of building an STO trading platform.
Yeah,
you could argue that's an opportunity right there. You could argue platforms which allow for tokenization. That's another opportunity. Is there one particular of those which you see as being the greatest opportunity?
The one particular platform that enables tokenization. Obviously, I think that Radix is one of the ones that I would shout out for that, because that's fundamentally one of the things that we thought was really important, was how can you make it really easy to issue representations of real world assets that were linked to something that would be recognized, like an equity issuance or something like that. So we made our platform specifically designed around API driven calling of being able to create tokens. Outside of that, I think that T0 and other exchanges that are looking more and more, I think LA Tokens also security exchange, are looking more and more at securities and how you can play more of what looks like a traditional stock market role of going through what's difficult in the legal process as well as the functional process of listing something. Another great example is probably going to be Polymath, where they're trying to provide this legal framework and support that is also necessary to do the listing. Because the more you have regulation in there, the more you need lawyers, the more you need to be able to actually manage that process, not just as a technical process, hey, I need to create some tokens, but also how do I create the offering documents, and how do I make that compliant? How do I make sure that my investors are compliant? How do I do my KYC, my AML, all of that kind of stuff? So exchanges are in a fairly well established position there, and any exchange who is doing good work at bridging that gap to security token offerings, I'd say is probably a good bet, because they already have a net cash flow positive cost of acquisition of customers. Mm-hmm. They have a growing wealthy base of people who understand crypto, and then they have a widening market of people who can create these security, who can buy into these security tokens when the security tokens are available. So they look very good, very well placed to move into this new market. But you want to look for exchanges that have constantly been, I want to work with the regulator, I want to make sure I'm regulated, rather than exchanges that have run away from regulators and moved for jurisdictions to try and avoid that.
Yes, absolutely. It's going to have to become a lot more professional.
Yeah.
I think we're going to see kind of another similar hype trend in a way. What I mean by that is, I think if there's the opportunity for STOs and a greater advantage of putting stocks on a blockchain, I'm sure we're now going to see a whole host of projects launching with that goal, because if there's opportunity, you're going to have a lot of supply of companies.
Yes.
And some of those are probably going to do exactly what you said, which is not work with regulators and try and get around it. Yeah. And that is, we're at a point in the market where that's the last thing we want. We want, for it to go global and mainstream, we have to have working with regulators. That is key. That is the end of part 1. As I mentioned at the start of the video, this interview was pretty long, so I decided to cut it down into 2 distinct sections. In part 2, we'll be focusing heavily on security tokens and institutional money. And I'm sure you guys are going to like that section, with the first question being, what is going to trigger the next bull run? So if you'd like to make sure you don't miss that, remember to hit the subscription button down below, and while you're there, you might as well like the video.